Good morning, traders. Welcome to Tuesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we can jump on in, as always, we need to check the news, see what's going on for today, and more importantly, when, so that we're not taken by surprise. So looking at the news for today, we can see that there's not really a whole lot going on. It's a pretty calm, quiet day. Mostly minor numbers, and the only medium ones that we have are speakers or later this afternoon. But the first news announcement's coming at 8:55 with Redbook, month over month and year over year. We've also got the 9:45 ISM New York business conditions, as well as the ISM New York indexes. 10 o'clock has the IBD TIPP economic optimisms. 1300 FOMC member Brainerd speaking. I mean, you can see there's just not a ton going on. There's a lot of medium news announcements, a lot of smaller ones. The one that I'm really honestly paying attention to more than anything else today is the API weekly crude oil stock, because at least that'll give us a clue in terms of what to expect for tomorrow. Everything else I really just don't see as very useful. So with that out of the way, I guess it's pretty straightforward. Now we can jump into some charts for today. Today being 3/2 of 2021. First up is the NASDAQ, and at the moment, we're just kind of chopping around this 13,000 area. More than anything else, this level at 13,000 just continues to act as a level of support or resistance. It so far seems like the entire dip underneath it was nothing more than an accumulation phase before now ripping the market right back up. And it kind of appears as though they did it in sort of a cup and handle formation. This whole thing might be gearing up for somewhat of a head and shoulders pattern. Let's try that again. Left shoulder, head, and then kind of looking for that right shoulder to begin kind of building in. Either way, this is still showing that this 13,000 area, or I guess more so now, 12,800, seems to be kind of the base of operations where the market, every time it comes near that area, just gets bought right back up. There are a few issues at the moment with this rise higher rather. We've got more continuation to the upside and the possibility of a channel low, but from a channel perspective, it never really made it to the highs. It missed it, and that shows a bit of weakness. And with that weakness, we also see that they attempted to break above the top of a wedge, and that is also in the process of failing. There are some concerns, right? If the bulls are taking over, why are they doing stuff like this, like missing major objectives or failing breakouts? There's just a few concerns on the table that I think they're going to really need to alleviate before the buyers are going to come in too heavy. And then over on the S&P with a very nice rejection off of the L5 and the possibility of a channel top. If you take the 2 points on the lows, transpose it to the highs, that gives us a near perfect test on the high and a rejection right back off. And that lines up really nicely with the L5. And, well, so far the market is grinding lower. The obvious concern is that rally yesterday was no joke. These are 15-minute candles, and that was how many candles back to back? Just all the way up. Huge rallying to the upside. If the buyers are so strong here, how are they getting shut down so quickly inside this L5? That gives us a little bit of a kind of an idea as to what's going on here. This accumulation was low, but it doesn't appear as though buyers are very interested in buying very high. That probably means that not only are we going to see some L5 rejections, we're probably also going to see some falling resistance rejections, but it might also make a lot more sense to see the market return back down to where the volume was before. That's where all of that support is likely going to come in. And if we look at this as an overall range, let's bring this in before it broke higher and after it broke down. So just the volume at the bottom. Let's see where all of that comes in for us here. There we go. So the volume node in this case is going to be at 38.27 quarter, and that's going to be the zone of interest for the market to kind of rotate back down to. It might get stuck more towards the highs of it. It might try to dig down a little bit through, but that's a really nice bell curve with the POC smack in the middle of all of that range-bound movement. What better place for the market to want to pull back to? Then we've got the gold market, which is breaking out of the tighter wedge, but still kind of inside of the wider wedge. It's a whole mouthful of wedges going on here. We've got this descending wedge that broke out really nicely, and at this point in time, it might have just ended up being a channel, really, more than anything else. But with that channel to the downside, we're breaking above, and usually when you get that break, you expect to see the market retest those lows. That goes for most channels. Whenever you break a previous level of continuational structure like this, if it has a big breakdown, it usually still wants to try to go back in the original direction. Doesn't mean it's going to succeed going all the way, but it's still going to make an attempt at it. So the fact that we have this really nice move to the downside in the shorter term, really solid 3 drives lower, a nice 2-legged correction back up, it would make sense to see sellers to try. It doesn't mean that they're going to win, but seeing sellers at least try a couple times here before saying the bottom is definitely in is usually going to be a consolidated bottom before a reversal. So in order for the buyers to reverse this market back up on gold, we've got to see that consolidation first. They're getting really good signs of it. There's MACD divergences. There's a lot of things that need to happen that are happening. It's a great sign. And if we look at the bottom of that big slide off, we can see that buyers are supporting the base of it. So it's looking great. We just need to see the sellers try a couple more times and get a couple more failures under their belt before that reversal usually is going to set in. And then over on the wild rodeo that is crude oil lately, this market is just screaming all over the place. A big drive to the downside, made it back down into the $60 mark, and through that big blow off underneath the 61s and a big slide to 60, they also ran into the bullish L5. So the bullish L5 is something that is typically the last stand, right? That's the final dip, the last spot that they're going to have to defend, and it's usually where the biggest amount of defenses are going to come in, because that's usually also the lowest risk and the highest reward. So there's a lot of things that are going to happen at an L5, and usually it all equals into a nice bounce when it sets up properly. In this case, it obviously set up properly. We have a fantastic bounce off of that zone, and a lot of it is likely due to the fact that it stacked up so nicely on top of the $60 mark, previous market structure, etc. So with so much bouncing going on here at the $60 mark, now we have to ask ourselves, is this potentially the low? Well, usually if it's going to be the low, again, we're going to see one side try a couple times. You don't usually just see a V bottom. It can, right? I mean, you definitely do see that sometimes. But more often than not, you're going to see the market chop around for a little while before we see that reversal back up. Now, we are dealing with a megaphone low, and the megaphone low overshot. So the bulls may be a bit more quickly aggressive, so it doesn't necessarily have to take as long. But seeing even just a bit more range-bound sideways action or a couple more attempts from the sellers to try and fail is all it's going to take to really start sparking the move back up. And then next up, we've got the euro, which is apparently the king of wedges at the moment. This thing is going all the way down to pretty much full wedge completion. It's running out of room now on this wedge. There's not a whole lot left. That could mean one of two things. Either this wedge just isn't there, which so far we're seeing the responsiveness, so I have a hard time believing that. Not to mention the fact that there's that gigantic level at 1.2 and a million other things going on down here. But we also have MACD divergences and everything else is lining up. So the wedge makes sense. It's just, it hasn't broken out of it. The sellers continue to sell along the way. And, well, buyers continue to pick it right back up off the bottom. We've got to get out of this. And eventually, there's just not going to be any wedge left. So because this doesn't necessarily fit the idea of not working, then if it does break lower, this may just migrate into a wider channel down and keep that overall trend going. So we could take this, copy paste it, and drag it lower, and we can see that it's already got some precursor to what it needs in terms of support. There's already some levels of support off of that, and if this breaks, that would be the next logical point of interest. So this is a big spot for the euro. This wedge is creating a situation where there's just not much time left for it to make a decision, and it's going to force people to make a decision. when the market runs out of time, it either does nothing or everybody says, okay, well, I guess we're going. Then over on the crypto side of things with Bitcoin, we've got a potential wider channel at play, and the market is coming off of the highs of it almost in a perfect way. Very nice rejection off of that, and it lines up almost picture perfect with 50,000. It's just one of those that everything's stacked up in the same spot. So we're obviously seeing a lot of resistance here, and it's almost as though they're creating a bit of a head and shoulders going on. So if we do see a bit of a breakdown, a bit of a failure at the highs here, it would make sense to see the market want to dip a little bit lower, right? Grab some of these lower prices, looking for bulls to come in at the lows of the channel. It might even be a new low back underneath to see if they can grab that flush down to 40,000. We haven't disproven the overall trend. Yeah, we've got this move down and it's got a lower high, lower low, and now a higher high. But realistically, we haven't really seen that good of a higher low and a continuation. It's just all these little small ones. So while we're waiting for extra proof on a bigger swing confirmation, everything is still technically pointing to the downside. Now, the one big saving grace would be this monstrous MACD divergence coming across the lows, which we are breaking out of. And again, this doesn't mean that the market can't go further up, but it's got some work to do. It's got to break out of this resistance. It's got to get out of all of this stuff first. We've got a really good start with a strong rally, but now they've got to hold a higher low, continue this thing back up, and really prove that the trend is attempting to reverse rather than just putting in one good jump and then falling apart. And then finally, over on Ethereum, with a good rally back to the upside, we've made it back above 1,500. The market is continuing its rally above 1,500, although we haven't hit the top of the channel. This channel would have been derived off of the low to low measure and then putting it on the highs to find a location. So that does mean that, it's a little bit of a different way. Normally you go high, high, and then draw it on the lows. But either way, we haven't tested physically the top of the actual channel itself. We do have a shorter term channel that was attempting to rally higher, but we can already see that's kind of losing steam and it's getting really weak up here. So realistically, this appears as though we've got 1, 2, and we're just waiting for that third final oomph. And that would be a perfect spot to finalize it right on the top of that channel. So again, it's not that the buyers have, completely taken over. It's the sellers still have a shot. We haven't seen that full trend shift. We haven't had that major higher high and higher low reversal yet. We've got the higher high. We've got divergences all over the place. Everything is saying that it should go up. We just need to see price action continue to reflect that, is really all this is kind of waiting for now. All right, well, that's going to do it for today. Stay safe out there. Keep those stops in play and let those winners run. Until the next one, I hope you have a fantastic trading day, and we will see you all then. Thanks.